Hello, beautiful people. I am going to show you real quick exactly what I do when I'm taking entries. This is what I have finally come up with as far as my trading process. And to run through this quick, because I know our attention span is not the greatest. So I figure out where I'm at in the market. I'll, divide my chart up in half by the swing low, um, just to kind of make sure I'm on the right side. I identify my swing high. I'm using the single candle starting point strategy. So I'll mark my zones up like that. And then I'll do the same for my, the bottom. So this is done on the 4 hour, right? So once I see that the market breaks out here or it's now turning around, I even mark this one up if I'm doing a counter trend trade. Like for example, that's the swing high here. And right here will be my signal candle. I'll go ahead and mark that. So when the market closes and breaks below that zone, I will look to take an entry right here. So after I identify that the market closes below this, I drop down to the 1 hour time frame. And from there on the 1 hour, this is when I look for my pullbacks, my opportunity for the pullback. And what I would do is I will grab my fibs. I will wait. I will mark it from low to high, or from high to low in this particular case. And I will wait until the market pulls back until this point and start making starting points. Since this is a big selling candle, I would, in some cases, I would drop down to a lower time frame and identify starting points within this on the pullback. So for example, I don't have any right here, so I would drop, say I will have to go a little bit lower. So when this market starts pulling back, for example, into the zone, so we drop, pull back. Here's my next starting point right here. So this is the last starting point that pushed the market high. And I will mark this right here as my zone. And what I would do, since this time frame is so small, I will go back to the 1 hour and set my alarm for when that market closes below that zone. And the minute it does, the alarm go off, I'll go ahead and set a limit order. And the way I had been doing it, been testing these two zones, is so that my risk to reward ratio is not so far off. Well, hold on, let me put that back here. So I use my 25% zone for my entries, so that my risk to reward is not as huge. It's a lot better. So let me go ahead and, I know I'm not explaining this right. So for example, if I do it at the 50%, to me that's just a 1-to-1 ratio. So what I've noticed, if I can get as close as possible to 25%, my risk to reward ratio is over 1.5, and most definitely it increases, because I will trade support starting point to starting point. So I would typically take profit down here, which increases my risk to reward ratio. My stop loss is always placed 5 pips above the high, so I usually count 5 pips up, so it'll be above this 2191, so 2196 is typically how I do it. So this is literally the entry. So I had my sell limit set. Once this broken close below, I have my sell limit, and I still have it set just in case it wicks back up, because oil did that and I didn't have my buy limit set, and it actually kicked me out the original zone, and I was out the trade at that point. But so I would have my limit order set for here to sell and then take the trade. But sometimes, like I said, it don't always work out where I miss my entry by a few. Now there's a possibility that this market may pull back and then allow me to re-enter right here and then start dropping. So that's what I'm hoping for. So if y'all have any ideas on how to make this better, please feel free to share. I'm really trying to become consistent. I like this process. I love the discounted zones. Thank you for showing me how to do this. I just want to get better at reducing my drawdown, having better entries, and of course, being more consistent in my wins. Okay, take care, everybody.